Good mo- good morning. It is Wednesday, the 11th of March, all day. This is the Morning Blast with myself, Ryan, and of course, Michael, your very, very candid market podcast. Disclaimers galore. Nothing we say is trading or investment advice. This is labeled explicit because there is a lot of swearing and a lot of ranting. Take us as you find us, etc., etc. Michael, how are you?
Yeah, very good morning to you, Ryan. Good morning, everyone. Not too bad, actually. I was just reading about the tube strikes that we've got
Oh, yeah,
up in a
glorious.
few weeks. The drivers apparently wanting to do 32-hour weeks and a 4-day working week. I reckon most in markets have probably done 32 hours already this week, and it's only Wednesday morning.
And I think, we're talking five-figure salaries as well for them, which
Well,
is
I would hope everyone's on a 5-figure salary. I
sorry,
think
I
they're
mean
pushing six, I think.
six-figure salaries. Sorry.
I think a 4-figure salary would probably be illegal these days,
Um,
sadly.
the thing is, obviously, this is a massive tangent, but yeah, the sooner these are automated, the better. And unfortunately, like we see many things, it's not really the train driver's fault. It's the union leaders that are just trying to kind of exert power, and they end up poisoning the industry or employing the employees against the people using the service. But anyway,
Yeah, and I tell you what, those union leaders most definitely are on 6-figure salaries and juicy pension packets,
oh,
and goodness only knows
huge,
whatever else. So,
huge
a day
pensions.
a day on strike is no skin off their nose, really, is it?
And also, it's no surprise that they always seem to do these when the weather gets better or if there's a holiday coming up. And anyway, moving swiftly on, we've got our dear friend Clive Lambert back for an update in
I
March.
was going to say, it's nice of him to turn up this morning,
Yeah,
isn't it?
isn't it just? What is this day 12 or day 13 in the Thunderdome regarding the Middle East crisis?
I believe it's day 12. It started on the 28th of Feb, didn't it? So that
Yeah.
would make it day 12, I think.
So Clive is back. So an update on levels and what's been going on in markets in terms of price action and stuff. Obviously, this is guaranteed for as long as we're talking because there could be a tweet from some energy secretary in about 2 minutes that sends crude barreling, $10 either way. But there we go. S&P posted a doji yesterday, just shy of 68.45. Lower down, we've got 67.22 to 36 is a big area of support, protecting Monday's 65.84 and 50 cents low and bounce. In the Nasdaq, that tested its 200-day simple moving average on Monday, but recovered nicely, following up with a doji yesterday. As we know, a doji is small body, all wick, a bit like myself. While we're above in the Nasdaq, while we're above the 24,900, the bulls look fine. So one to keep an eye on there. In the DAX in Germany, saw green yesterday, while while
Go on, right.
23,728.
Scroll down.
Yeah, exactly that. So DAX saw green, while 23,729 is below us, and prefer the recovery story. We prefer Clive prefers the recovery story.
Yeah,
Sorry.
Clive's talking about himself in the plural there.
Yeah,
I
sorry,
don't quite
it's
know.
getting very. I think he's getting a bit cocky, to be honest.
Yeah. He's
You're a
such a
stock,
big dog that, he talks about it as if there's
quite,
3 or 4 of him now.
quite. It makes it very hard to read all this. It feels like I'm reading some kind of like Greek fucking Odyssey.
It's like War and Peace coming through on WhatsApp in the morning.
Right, Eurostox 50.
We love you really, Clive. Please don't stop sending.
Yeah, Eurostox 50 futures. 5,785 is the reference level we're watching, and we'd like to see in the FTSE, we'd like to see 10,360 holding as support. US T-notes and bond futures both posted bullish engulfing pattern reversals on Monday, but didn't do anything to confirm yesterday. 112 spot 14 is a reference as resistance in the T-notes. Eurodollar rallied back to its 200-day simple moving average yesterday, where sellers returned. Cable hanging around with its well-watched line. Bitcoin continues to trade sideways, just shy of resistance at the 74,000 level, which we seem to keep saying about. Metal space, there's been a relative oasis of calm of late, believe it or not. Copper gapped up yesterday, though, with 12,970 is now gap support. In London Metals Exchange, aluminium saw some upside rejection on Monday, but the dip was bought yesterday, so the bulls are still bossing there. In the energy space, I'm not even going to read the energy space part out, to be honest, because anything's going on. There's no technicals to watch in the energy space, unfortunately, at the moment. And we'll get onto that in a second. Gas oil, which is kind of European diesel really. Gas oil is seeing dip buyers once more and needs to retake 1,014 to get the bull story back on track. European gas, TTF, gap lower yesterday and left Monday's candle floating above on its own. 45.10 is support and holding. 54.41 and 55.75 are upside references. EU carbon markets that rallied yesterday, but still just shy of its big resistance at 74.50 to 86. Things seem a bit calmer this morning, according to Clyde, but we'll see how long that lasts. And again, if you're listening to this in about an hour's time, which most of you might be, God knows what's going to be happening. Obviously, we do have to mention a bit about what happened in the oil markets yesterday, and we will go on to that a bit.
We may as well start there, actually.
Yeah. So obviously, it was a hell of a day yesterday.
Again.
For a number of reasons. I think one of them in particular was, we've got to talk about it. Energy Secretary Chris Wright's post on X that the US Navy, quote, had successfully successfully escorted an oil tanker through the Strait of Hormuz. And this just sent oil barreling lower.
Very good.
I think, thank you, roughly about 17% in minutes. He then deletes the post. White House confirmed it's false. Oil reversed sharply higher on the deletion. Then reports emerged that Iran have started laying mines in the strait. Trump did tweet that they've sank 16 Iranian. Well, he actually posted I think the White House Twitter account posted that they've sunk 16 inactive mine-laying vessels. Now, I'm no marine biologist.
Maybe go and sink the active ones.
Yeah, I'm no marine biologist, but maybe focus on the active ones. But yeah, so it was a hell of a day for oil trading. And I can understand, and we have been trying to tell people that unless you've been doing this a long time, it's very likely markets are going to be swinging on tweets more than anything else. And this was exactly what we proved. Now, where I'm a bit skeptical, and I hate it really pisses me off when people are saying, oh, it's, manipulation, and or the Fed have stepped in and they're doing. I'm like, oh, behave. Yes, we know, we know the government or whatever agency is kind of in futures because they've actually come out and told us. They've not been in it for decades, which people are saying, but all this, that, and the other. But yesterday, where the Energy Secretary says quite clearly that an oil tanker has been escorted through, that then turned out to be incredibly false, and then he just deletes the post without any explanation. That stinks. Sorry to say it, but there we go.
It's not great, is it, if we're being completely honest? And I think the bigger sort of issue with all of this, or the big unknown, is that, well, actually two things. Firstly, the tweet just vanished. There wasn't a correction issued or anything like that. It was just, 1 minute it's here, 20 minutes later, it's not here. I do think it was interesting, though, because if you actually go and watch back the video that accompanied this message, the video didn't actually bear, and it was Chris Wright giving a 20-second media appearance or whatever it was, that didn't really bear any resemblance to what the caption actually said. And what I mean by that is, in the commentary Chris Wright was giving, he didn't actually mention at all that any escorts had taken place. I don't think he even mentioned the words US Navy. So very, very strange. Whether it's a conspiracy, whether it's a cock-up, I doubt. I think one thing, to be completely honest,
one thing we need to understand is there's every chance that he didn't write this tweet himself.
There's no chance he wrote it.
Yeah, he has lackeys. But then you ask yourself, and again, I hate getting the tinfoil hat out, but it was such a bad tweet that was then just deleted. I mean, it was so bad that the Iranian foreign minister was on Twitter within seconds basically calling out the energy secretary, saying fake news to manipulate markets. And now, someone definitely feels like they were doing that, but we'll see. But yeah, it stinks, to be honest.
Yeah, the other thing I would say on that, just before we move on to the issue of mines, is in the aftermath, of course, you had every journalist under the sun basically ringing up the Department of Energy going, lads, what the fuck is going on? And the official line from the White House and from the Press Secretary Caroline Leavitt was, this has not happened. This was, misspoke, whatever you want to call it. One thing I did think was interesting, though, was that Edward Lawrence, who's one of the senior political guys at Fox News, the way he framed it was that the post was, and I quote, premature. Now, you don't use the word premature if it wasn't meant to happen at all. You use the word premature if it was posted too soon. I do wonder whether perhaps there are, some sort of moves afoot on that front, and the Energy Secretary just got a little bit overexcitable. But either way, it was utterly
Or
ridiculous.
do, do you know what? Again, thinking about we're looking into this far too much, to be honest. We're probably overthinking this, but
Mm,
it could have been what was meant to be just a draft tweet, because
yeah,
I'm assuming how this works is they draft tweets, they get vetted, and then they hit send, or when it's appropriate, they don't just type the message and hit send. That's what I hope
I
happens.
mean that's how you and I use Twitter. I would hope that's not how the
Oh yeah, no,
government
I
is using
absolutely do vet
Twitter,
my
right?
tweets before I send them. Yeah, absolutely. But no, there's every chance that they've drafted this tweet for when it does happen, and someone's just hit send rather than keep it in the drafts. But yeah, whatever happened, it absolutely
Mm.
roiled energy markets, well, crude markets, and again, just kind of touches on what we've said pretty much every day since the start of this kicking off. Tweets are driving markets more than fundamentals, and fundamentals are driving markets more than technicals.
I think
Um,
the other thing that I took away from this, and again, if we kind of set aside the noise and the debate around, why did it happen, who did it, etc., it again just speaks to this desire within markets at the moment to jump on any positive or good news as soon as possible.
bad and bad news.
And bad news, because obviously we saw it go the other way. But I think, again, it just speaks to how, everyone is waiting for this one headline that basically signals the all clear, whether it be in terms of, Hormuz transits getting back to something resembling normality, or, the US pulling back in terms of de-escalating the conflict, whatever it may be. Everyone is kind of assuming still that some sort of U-turn is inevitable, and everyone is basically trying to front run the next man in terms of being the first one to price that
Well,
U-turn.
I think
So that doesn't help matters at all.
I think slightly more nuanced than that. I think everyone's basically just turned into headline traders. And everyone wants to be a headline trader. Everyone, because it looks on paper, it looks so easy. When you look at a chart and you see a tweet and then you look at what happened within minutes or seconds later, it looks like a very binary thing to do. When you're in a trade or when you are jumping on a headline, it's very rarely like that when you're actually
Mm.
trading, when you're at the coal face. And this is where I think a lot of people do their ask. Also, I've seen a few people kind of say, look, do you know what, hands up, I'm just not trading these markets. And these are experienced traders, and fair play to them, because you can't exactly you can't hold positions in oil at the moment.
No,
If you are in a position where you can react to headlines, like we've said before, and I think I've got a couple of articles out there on it over the years, yeah, there are people that are professional headline traders. There's algos out there as well that are headline reading algos. They're the ones that are probably making some decent cash on this. And in fact, I know basically a whole team of headline traders, and rumor is from these guys are doing very, very well for themselves, and I'm pleased for them. But these guys have very fast access. They have their direct market access as well in terms of the news, and also in terms of actual direct market to the exchange. They're keyed up. This is their bread and butter. These are the guys that are getting out when most retail are getting in on a headline.
exactly. So
Um,
the other
go on.
I was going to say the other thing, of course, is the other headlines we had on the energy and the Hormuz front yesterday regarded this issue of mines in the Strait of Hormuz. This came from CBS initially, and I'm just going to quote from their reports because it's the easier way to do this. So CBS noted last night that US intelligence has begun to see what they termed indications that Iran is taking steps to deploy mines in shipping lanes in the Strait of Hormuz. We then had CNN probably about half an hour later reporting basically the same thing, but they added a little bit more color, saying that US intelligence believes that only a few dozen mines are in place so far, but that Tehran still has control of all of the small boats and mine laying vessels that would do this, meaning that it could deploy, hundreds, if not thousands more in the waterway. The picture on that front was then clouded later on by President Trump, who said on Truth Social that the US has no reports of Iran having mined the Strait of Hormuz. But then in the next sentence, he said if they have been placed, they need to be removed immediately, before threatening that if they are not removed, the military consequences would be, and I quote, at a level never seen before.
Yeah.
The reason why this is important is because right now, and this is nautically correct, right now the Strait of Hormuz is not closed. The reason why there are no transits through the Strait of Hormuz is
Well, there are transits. Let's be very clear on this.
the reason
There
why
are
there aren't. transits at the usual level, let's put it
Yes.
that way, is primarily due to risk. Ship owners are basically saying it is far too risky to be putting our assets and our people into
Yeah.
a very, very narrow shipping channel when there is kinetic action happening over our heads and on one of the banks. And
Yeah.
even this morning, we've had reports of two vessels being struck per the UK MTO. If we were to move to a situation, and of course, in light of that, oversimplifying massively, if you can sort of calm down on the kinetic action front, you would hope that that can then mean that safe shipping transit can
Yeah.
resume. If we're then moving to a landscape, and I stress we probably aren't there yet, at least based on what we've heard so far, if we move to a situation where actually there are a shitload of mines in the Strait of Hormuz, that is a completely different kettle of fish. That is effectively a formal closure of the strait, because at that point you cannot run the gauntlet with wherever the mines may be under your keel if you're sailing a boat through there.
You get all nautical.
I've got to uncle Albert, haven't I, during the war. The other thing to bear in mind is that it would also massively complicate the reopening process, because it wouldn't just be a case of going, well, all the missile launchers have gone, we'll send a few Navy escorts through and everything's fine. It would be a case of, okay, we now need to painstakingly go through the strait, detect where these mines are, remove them, blow them up, controlled explosions, whatever it may be. I stress I am not an expert on naval warfare.
I'm so glad you said that, because I was about to say, I was about to caveat everything we're saying on this, that me and Michael are not experts in mine warfare,
No.
unlike most of Twitter this morning.
Yeah, honestly, that's gone mental. However, I think from a market and a macro perspective, the equation is a relatively straightforward one, in that if there are mines in the Strait of Hormuz, it will take much longer for it to be reopened than if there weren't any mines there. Quite how those mines work, how many of them there are, exactly where they're placed, what the name of the ship would be that comes along and gets rid of them, doesn't really matter to markets, to be completely honest with you. It's simply a case of, if it takes longer to get the strait reopened, supply disruptions will continue for longer, the inflationary impact will be bigger, the growth headwinds will be bigger, etc., etc., etc.
Yeah, no, exactly that. I think the optics are just very, very bad as well, aren't there? There's just a lot of confusion that we're getting out of the US, and that, things to note as well is, like, as you said, people have already, I've seen some quote unquote experts saying, oh, mines are not really a threat because they don't move. Well, that's completely bollocks, because we've seen Iran just kind of drift mines out into the strait already. And, if there's a couple out there, it's still going to impede your transit. One, talking about optics, and a lot of this is optics. Some optics that didn't look very good was, coincidentally, yesterday we saw 4 mine detecting or anti-mine ships, whatever they're fucking called, that have been US ships that have been based in the Strait or in the Middle East for 30 odd years, actually turned up in the Philippines yesterday, I think it was, to get scrapped.
Oh, good.
So that was some awful optics, but there we go. But as you said, if mines are now in play, then that is something that will hinder the reopening and how this goes. I know some US officials have actually called the strait quote unquote Death Valley, given which is obviously nice wording, given the layered threats of mines, explosive laden boats, shore-based missiles, etc., etc. So again, even if the US begins escort operations, clearing mines is separate and a much slower process. So again, it'd be how mine sweeping is measured is, it's in weeks and months, not days. So one to keep an eye on there.
Yeah. The other one on the energy front, and I appreciate we've sort of droned on about this for quite a while now, but the other one is, of course, this stockpile release that everyone is continuing to talk about. The WSJ reporting overnight that the IEA, that's the International Energy Agency, they have apparently proposed the largest ever oil release from their reserves. The WSJ did not actually give a number for this, but the prior record was 182 million barrels, and that was released in 2022 at the start of the Russia-Ukraine war. There's set to be a decision made on this proposal at some point during the day today. Just 2 things on that. Firstly, whatever the number is, let's call it 200 million just because it's a round number. That doesn't mean that 200 million barrels are going to suddenly pop up tomorrow.
I was about to say,
it takes a lot of time to get this out of the reserves. I was reading about the SPR in the United States. It's quite interesting, actually. The SPR stateside, they keep the oil in salt caverns.
Yeah.
And then the way they get it out is they inject water into the bottom of the cavern, which pushes oil to the top and out the pipe. And oversimplifying it a little bit, but that has a natural constraint in terms of how quickly you can get the oil out, because you can only put so much water in. You've got to be quite careful in terms of, making sure the cavern doesn't just disintegrate, which will effectively fuck you in the long term. So, 200 million barrels, whatever the number is, great. It's going to be a relatively kind of slow and steady thing in terms of getting that supply actually onto the market. Another point that a few people have made, and I think a lot of people are kind of getting the wrong end of the stick here a little bit, is this is basically designed as a stopgap measure. I don't think anyone, whether it be the IEA or various G7 energy ministers, are assuming that we're going to just turn on the taps out of our SPR and it's all solved again. That's not the way this works. It's more of a kind of sticking plaster approach to ultimately bridge a gap between where we are now with oil flows significantly disrupted to sometime in the future when flows get back to a more normal level. And the hope would be that releasing stocks from reserves kind of tides you over in the interim period. It's not a perfect solution, because at the end of the day, you're replacing a flow with a stock, and the stock is finite, and the stock will have to be replenished at some point in the future. But it's kind of the best thing that they can do, if not the only thing that they can do at this point, to just give a little bit of reassurance to the market that they are doing something and that they are taking the situation seriously.
Yeah, no, exactly that. Just one final word before we go on to CPI, just again, because it was a quote actually from Senator Murphy that I forgot to read out earlier on. He said after being...
He's a Democrat senator, just to flag that.
Yeah. So there was a classified briefing that the administration, after a classified briefing with the administration, and he's come out and said there is no plan for getting the Strait safely open. Obviously, he has kind of a reason, a bias to say stuff like that, but it just gives you an idea of how, shall we say, ramshackle everything is, over in Washington at the moment. And this again is why we're seeing random tweets from random, heads of departments that are sending markets crazy. So again, as we keep saying, try and stay out of trouble when you're trading. If you're trading these markets, my recommendation would be don't. But there you go. But anyway,
the other thing that doesn't help on that front actually is that President Trump is not communicating particularly well either. The sort of comm strategy appears to be, I'll just answer my mobile phone when a random journalist rings me and tell them what I want to tell them at that given time. There's no, press briefings or any sort of coherence around it, which definitely isn't helping matters either on that, in that vein. But we may as well move on. Obviously, we've got CPI today. Usually we'd be standing here going, it's a hallmark event, it's a major risk for markets. I'm going to be completely honest. I really don't think that February CPI out of the States matters one bit today, whether it be to markets, whether it be to policymakers, whether it be to anyone, to be honest with you. And actually, no matter how little you think the CPI numbers matter today, the January PCE inflation figures that we get on Friday, they matter even less, because not only they're even more stale than the figures we're going to get today. Why am I saying it doesn't matter? Well, very simply, the data references February. The data references a time from before the recent energy price shock, from before all of the uncertainty that now clouds the outlook as a result of what's going on in the Middle East. And simply policymakers will basically not even take any account of it whatsoever in terms of what they're going to do next. All of the focus now is on, firstly, the duration of the conflict and the duration of any energy price shock that we see. And secondly, whether there's the potential for any inflation stemming from that to lead to what we would call second round effects in terms of, a more persistent persistent degree of price pressures. So, headline CPI is expected at 0.3% on the month and at 2.4% on the year. That annual rate will be unchanged from where we were in February. The core metric, that's seen at 0.2% on the month and at 2.5% on the year. Again, that annual print would be unchanged from where we saw it in January. Money markets are pricing the next 25 basis point Fed cut for September. We've got about 42, 43 bips of easing in the curve by year end. Again, I just really don't see a world in which CPI materially shifts that pricing.
I was going to say it's potentially the most irrelevant CPI we've had in recent history.
Yeah, absolutely. And I know people listening will be saying, well, it's important to, not forget the underlying macro story.
It's already out of date, though.
Well, exactly. And, we need to remember where we were before all this kicked off. Yeah, absolutely. But it's already out of date. If headline CPI comes in at 2.2, 2.3, 2.4, 2.5, 2.6, 2.7% today, nobody is going to be changing their outlook or reassessing anything based on where that print is. It could literally print anywhere. And let's say CPI comes in at 2% today, bang on the Fed's target. Core CPI comes in, bang on the Fed's target as well. Are you telling me they're going to cut in March, given what's going on with energy? Of course they're not. It doesn't matter. It doesn't matter at all.
Absolutely. No, I couldn't agree more with you there. But again, we got to mention it because other people will. And again, speaking of news that, or events that any other time would, in normal times, quote unquote, would be major, yesterday was a key one, right? So yesterday, Volkswagen announced that in the next 4 years, they're going to cut 50,000 jobs in Germany. And basically, the financials came out and they're on their ass, right? Any other day, that's a technical term for you, any other day, that would potentially be the biggest story of the day. Real sign that the Europeans, German in particular, auto industry is basically, it's a dead man walking, whatever the German phrase for that is. I'm sure they got a 20-syllable phrase for that, or word for that, but there you go. But yeah, that is a huge announcement to be making, especially in Germany that are already under pressure anyway. And it just shows you, that basically because of the pressure they're getting from, Chinese rivals. Any other time of the year, that would be the main headline of the day, certainly in the European session. And it barely got on looking. I mean, there's going to be a lot of people out there who don't even know that headline came out.
Yeah, absolutely. And it is important. There is a lot of other news flow out there that's just being massively overshadowed. The other one is this massive bond issuance that Amazon have embarked on. They issued about $30 billion worth of US dollar denominated debt yesterday. They're doing a euro denominated issue today, which is targeting about 10 billion euros in terms of their raise. Of course, Alphabet, they did similar earlier in the year. This is all to fund, obviously, their CapEx and the data center expansion as a result of the AI boom. But again, this is all kind of going under the radar a little bit because everyone is rightly focused on what's going on in the Middle East and on geopolitical developments. But, we shouldn't lose sight of what's going on a sort of broader level. The other, just while we're talking about corporate news, the other story I found a bit odd yesterday was Salesforce. Of course, Salesforce have been absolutely battered in recent weeks as part of this software sell-off. AI is going to kill their business model. When Salesforce released their earnings a few weeks ago, they announced a pretty chunky buyback. I think it was about $50 billion worth, and it equated to about a third of the free float of the company. Essentially a pretty desperate attempt to kind of try and prop things up given the software sell-off that we were seeing. Well, yesterday they announced that they're going to sell $25 billion, with a B, dollars worth of corporate bonds in order to fund the stock buyback.
Just don't do the buyback.
Well, exactly. Maybe I'm oversimplifying this a bit, but maybe if you just scrap the buyback, you wouldn't need to lever up your company, which probably makes the long-term prospects of it even worse at a time when the market is taking a dim view of you in the first place. That really just strikes me as completely and utterly illogical.
Yeah, maybe it's just because I'm verging on being a boomer, but buybacks were something you did when you had a lot of free cash lying around.
Yeah, you don't raise the cash to then use it in a buyback. You buy back because, fundamentally, you've got a load of cash that you don't know what to do with it.
Yeah.
You certainly don't go to the market and say, could you please lend us some money so we can buy back our own shares? I mean, honestly.
No. Well, I'm glad it wasn't just me oversimplifying things yesterday when I was like, what the fuck is going on here? But anyway, Michael, I think that's it for today.
It is. Yes, that is all.
Well, listeners, whatever you're doing, please keep it tight, stay safe, try and stay out of trouble, both in markets and in life. hopefully, fingers crossed, we'll see you all tomorrow. Just survive today, basically. Capital